Afternoon, everybody. Just seeing how many people we got online today. 33. Okay. Well, it said 5 yesterday, pretty much all day. So let's see what happens to the counter today, whether it works or not. Afternoon, Steve, Evil, Fletch, Danny, Crom, It's Time, Kennedy, Paul, Virginia, Mark, George, can't say your name, xrupdate.news, David. Hello, good day, goat. Appreciation for my day, $5. Thank you very much. That's very appreciative. Well, I'm very appreciative. Good way to kick the stream off, isn't it, with $5? Thank you very much. Going bowling on Saturday, my son's birthday, so we'll go towards about 3 bowls probably. Afternoon, Callum. Thanks very much, David. Very much appreciated. So today we have got PMIs. So we'll go through the news first. We will have a look at what's happened this morning. We'll have a look at what happened last night with FOMC. Afternoon, Amy. And then we will go and have a look at the PMIs at 245. Unemployment claims have also come out. For some reason, it hasn't refreshed. They came out as pretty much expected. So nothing particularly exciting there. But lots of move this morning. Guten Tagens par dig. Shouldn't really read out stuff in foreign languages because I have no idea what it means. So there you go. Neo, afternoon. So going back to yesterday, first of all, to start off with, we had the FOMC yesterday evening, which was there. Followed by some retail sales for New Zealand, etc. But that was FOMC last night. So FOMC last night, we had a mixed bag of results basically out of it. The main outcome of it seems to be the market thinks we're still on for a September rate drop. So participants at the meeting addressed it would take longer than previously anticipated to gain greater confidence in inflation moving sustainably to 2%, which we know because we had a bounce. So basically, they're just saying the same as they did before. We've had that bounce on CPI, therefore we're not sure which way it's going to go. So it looks like a September rate cut. So there we go. US short-term interest rate futures are down on the FOMC minutes. Traders still betting on a September start to Fed rate cuts. So thanks very much, Steve. $10, a load of bowls. Thank you. A load of bowls. Careful how you say that one. Afternoon, Peter, Reverend. Thank you very much, Steve. Much appreciated. A load of bowls. Hey, I don't need the bumpers up either. I can do it without bumpers. Sometimes I go bowling, and I don't go very often. It's very rare. But sometimes I go bowling and I get a strike like every other go. Pretty good. Straight down the middle. Other times I go, can't hit shit. Really weird bowling, isn't it? 'Cause sometimes you kind of go into a zone. A bit like trading. You go into the zone. Bowling in the zone. I should write a book about it. A bit like trading in the zone, or bowling in the zone. Not that I know how to do it. Anyway, why don't we talk about or use your triangle indicator? Because I don't trade them because I use the stop loss. There's absolutely nothing wrong with it. Thanks, David. Another $5. Matching Steve. Hey, how many people got in here? 46. If everybody could match Steve, that'd be fantastic. I'm only joking. Please don't do that. Thank you very much, David. Much appreciated. Afternoon, Dev. It is Swedish, Magnus. Right, okay. Yeah, so don't use the triangle indicator, basically, because it uses stop loss. There's nothing wrong with the strategy at all. It's a really good strategy. I traded it in prop for a bit, which was great. So symmetrical triangle patterns basically are contraction. So after a contraction, you tend to get an explosive move. But they are very much something that you need to run. And you need to use, obviously, a stop loss with them. So it's just not something I trade in here. It's good for prop because it is a very solid strategy. But it's the reason I prefer, and I'll go into the news in a sec. The reason I prefer symmetrical triangles, and I like them as a pattern and as a system, is because they are a little bit like trend trading. Yeah. So in trend trading, the only way you can make it work, because the strike rate's only about 30-odd%, 40% if you're lucky, same as symmetrical triangles, is in a trend, you have to wait a long time to get your 3, 5, 10R return. Symmetrical triangle patterns, because you are trading a contraction, when they break, they don't work as much as any other strategy. Yeah, they're 30%. They're a very low strike rate strategy, like a lot of them. However, because your stops are so tight, and when you get that contraction break, it tends to be a high risk reward just as you get to the top of the range it's broken from. If it breaks out of that and goes, you tend to get the reward much faster. And the rewards can be good. But when I was trading them, mainly on the 4-hour time frame and the hourly time frame, you can easily get 10R returns on them, but you will get stopped out a lot. So there's nothing wrong with them. And you will also get tons and tons and tons of setups every day. So quite a lot of symmetrical triangle making it work is about getting the trend direction right, because symmetrical triangle patterns can break in both directions. Yeah. So you get a bullish, that would be a bearish symmetrical triangle, and you get a bullish symmetrical triangle. But obviously, as we know, price can break in either direction. So, you know, it doesn't really matter which way it goes, but it's knowing really what price is meant to be doing. So if you follow the symmetrical triangles, there's one here on the screen, look, not particularly great, but bullish symmetrical triangle, break, stop. Your risk reward on that is already somewhere about 4R, isn't it? Yeah. They're good. I just don't, it's not my style of trading. I get frustrated with stops, as you know. Nothing wrong with them. Put the dosh towards the course. Towards the course, the fake Lee keeps trying to sell me on Discord. Is there a fake me? There's a fake me. Nirav, right, did a video a few days ago. He released a new video about fundamentals. No, I don't follow Nirav, but I get his emails. And because I did his course ages and ages and ages and ages and ages and ages and ages ago. In fact, his very, 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 very first one when I was doing futures. And basically, I get his emails, and he did a new video about stuff. And in there, first thing he opens up with is, I just want to warn you about somebody pretending to be me on Instagram for him. But there's fake everybody's everywhere. It doesn't matter who you are, if you're doing anything on YouTube or social media in any way, shape or form, even if you've only got 10 subscribers, someone will try and fake you and try and sell you stuff. So it ain't me. I don't sell courses, as you know. Afternoon, Ismet. So there you go. So that's spectacle triangles. We just waffled off there. But anyway, FOMC, nothing much. So if you look at the chart yesterday, that was FOMC. Yeah. Didn't do anything. So we're still in the same boat. We haven't got a clue when the interest rates are going to drop on the US. They are still thinking it's going to be September. So until then, throughout the whole summer, we are neutral, slightly bullish US. There's still a chance that that CPI number will pump. Yeah. So at the moment, the fundamentals are pointing not down for the US. So we'll have to wait and see what the CPI number does. Yeah, that's not a very big drop at all. They're not even below 3%. Look at us down here at 2.3, beating euro. Bearish, not good. So we'll see. But so that was the overnight stuff. This morning, we've had all the PMIs for Europe. I won't go through them on Financial Juice because it's easier to look at them on Forex Factory. But as you can see, we had a fairly bullish move on the euro today. So the French came out at a 4.46, which was above forecast for manufacturing, came out below for services. They are a very mixed economy for manufacturing and services, France. German, mainly manufacturing, came out as positive manufacturing and positive services, so bullish euro. Overall, combined came out bullish manufacturing, as expected, roughly on services. So overall, bullish euro. As you can see, we've had some decent moves on the euro this morning. So that was where the PMI figures came out. And we had a nice bull move up to ADR. So euro pound ADR, euro US ADR, and New Zealand yen was also an ADR. So euro pound, I got out of some of that this morning. So I took this one off there and I did a 50%. Actually, it was slightly more than 50% drawdown control on that position there. I took 0.5 off of nope, it was a 0.97. So I took 0.57 off of that. So more than half of that. So I took that one off, used half of that for drawdown control. I've still got two on. I'm seeing if we can fill this propulsion gap. Yeah. There is a good chance that we might get a pullback on this. Both of these are bearish now. So because we've got a bearish against a bearish, I think the euros are going to come down. I think the pounds are going to come down. But with the euro and the pound, it's who's the weakest. So if that euro goes first, which it will do, we should get this weakening before the pound. But we've just had a general election announced in the UK, which is going to be in July. That may well weaken the pound quite badly as well, because we've got uncertainty coming. So I'm giving it the benefit of the doubt that we might get a little bit of an ADR push tomorrow as well, in which case then that gets me out of this. Because I really want to be, to be honest, it doesn't really matter too much, I don't think, on this one from a directional bias. I just think the euro is going to go first. Euro yen has just hit ADR. We're just about to get the news coming out. Let me quickly go to Euro US. So the PMIs are just about to come out in 45 seconds for the US. So the pound PMIs came out mixed. Pound in the UK, we are more service-based than manufacturing-based. Services PMIs came out at 52.9, which was slightly down. Manufacturing came out, which was better, but we're not massive exporters and manufacturers. So we do have fairly decent car industry, solar, that sort of stuff, but the vast majority of our stuff is banking. So yeah, mixed for the pound, but the pound reacted fairly badly this morning. Not too bad, but not too good, but no ADRs, as you can see. Euro CAD's just hit ADR as well. So let's see what happens with this US dollar. There we go, down. So that's bullish US. 50.9 manufacturing. That's up 0.9, not a big hit. And 54.8, that's a massive hit on the services. So that might well give us a nice bullish run today on the US. We'll see what the market makes of it. But obviously initial reaction was strong because both numbers were very positive. I had an opportunity to get out of this today, this Euro US. I've only got two on it. I had another one up there, so I've already banked. But I wanted to see if we could get back down into this propulsion. So I'm not actually targeting that, but we've got a very small propulsion gap here, which I was hoping when we got to ADR, because we had the Euro news, I was hoping we were going to get some bearish news on the euro. Unfortunately, we got bullish. So the fact that we just had bullish US, I think there's a good chance that we could break this low today and move down a little bit. So I've got my targets. It's basically in this accumulation here, just around this propulsion gap. So I'm going to watch it and see if we can get down there. But it is a bullish move. So hopefully we'll get some rallying in that. See what the indices are up to. I'll take that. Don't know if you can see that, but clean break, straight to target on the NASDAQ. Clean break, straight to target on the Dow. Clean break, straight to target S&P. Quick way to make $350. Clean break on the DAX this morning as well. So DAX today was a clean break to the upside, to target, and then stopped out in the second half in profit. So nice and clean across the board today, which is nice. And they are still dropping. So if that is going to be a US rally, we should expect all indices down today. So we'll see if they continue that rally. But that was nice. Take that. There we go. Do you have any idea what happened to the pound in previous GE announcements? GE announcements? What's that? General election? No, we haven't had one for a while. I just want to see the dates. There we go, list of them. Don't need to go back to the 1800s, do I? Really? Okay, so 2019, 12th of December, 2019. That's before COVID. So we're there, aren't we? Yeah, big spike, look. So it's there. Uh, 12th of December 2019. Wonder what day that was. Yeah, I mean, fair bit of volatility, look. So we had a big gap up, look. So that's the 12th. So the day after it gapped up dramatically, but I need to figure out when that was. 12th of December 2019. 12th. Oops. December 2019 day. Thursday. So that was a Thursday. So that's interesting. So we had a big gap up between a Wednesday and a Thursday. So that was a Thursday. That was a Friday. So that was look at that. Don't normally see that in Forex, do you? So that was the swap, basically. At night, they basically gapped up dramatically, but filled the gap. So you will get some volatility, potentially. Don't know. So, I mean, I was trading then, but I don't actually remember being in anything particularly of interest. So I guess you just need to be prepared for a spike. Right, so that's your news this afternoon. The PMI is basically positive US. We've got home sales at 3 o'clock as well. And unemployment's just come out as positive as well. So it's all good for the US today. So as you can see, we've got a spike forming on the US at the moment, bullish. We'll see if we can get some decent movement on this. But obviously ADR is all the way down here and we've got lows. So if you look at all these US pairs at the moment, because obviously what's going on with the US, everything is ranging quite a lot because obviously there's no real advantage US at the minute on anything. So we are in ranges. So any news that you get has got to get through bases. Yeah, previous support resistance zones where you're going to find people wanting to buy up because it's breaking up. Everything's breaking up against the US on this weakness, but it's not weak. It's not strong. It's just not going anywhere. So it's going to take something pretty hefty to drive that US to get a decent ADR move out of it. I'm not sure that's going to be enough, but we'll see. So it is bullish at the moment. Pushing against the CAD up into previous highs. US dollar Swiss just undoing the day's move. And US dollar yen broken out that range. So, well, say range, what was potentially forming as a range. So this is the previous intervention, intervention 2, which is ADR today. After that, 150 ADR. We've got the pullback on the first intervention, high. If that gets broken and that gets broken, next target is all-time high. And that is where we know Japan pulled the trigger. So we'll see what happens with this. This could form more danger for anybody longing or shorting this US dollar or doing anything with the US dollar, basically. So be careful with this US dollar at the minute. Right, so ADRs today, I've covered euro pound. So that went straight up into ADR this morning. We had a reversal alert kick in off of ADR. We had a nice M pattern reversal starting. So I got out of that up there, partial. But it hasn't gone anywhere so far today. Euro yen has just hit ADR. On that new spike, so we're up at ADR there. New Zealand dollar yen has also hit ADR today. That's coming down very nicely. So reversal alert. We've gapped. So we've got a gap down situation on this. Look, we've got a gap in the market. So that reversal alert is about to trigger on this candle. So there's a short signal on the New Zealand dollar yen, being in 20 seconds. And Euro CAD has also just hit ADR. That's come straight off of ADR immediately. So just taking another short on that one. Just target on that. Propulsion might as well. So yeah, so all the ADRs today, not great because it's mainly to do with the whipsawing on the news, which we've had a lot of today. Afternoon, Alan. 2019 jump in pound from election call was due to prospects of US-UK trade deal, was it? It came back down. Always the way. This is what news is all about. And this is why you can't trade the news, because all a news spike is, like we've just had, all a news spike is a knee-jerk reaction from the market. So the market, when there's news coming up, the market preempts the news. Yeah, it puts a speculative play into that news. And then when the news comes out, that news is either what you're expecting that preemptive move to be, and you then have two options. Yes, we made money on it, brilliant, take the money, or crap, we got it wrong, guys, get out. Yeah, and this is what news spikes are, is basically a knee-jerk reaction to that event, which is either positive or negative. And it doesn't matter what it is, you make a move at that point. If you've got it wrong and you should have gone the other way, you go the other way. If you've got it right and you've got enough profit, you get out. Yeah, that's all that news is. People think that the news is, oh, look, the market's massively moving because it's positive news. No, the market's massively moving because they either got it right or they got it wrong. It doesn't matter what they did. What they need to do is adjust the position. That's basically all you see in these spikes, which is why a lot of the time these spikes undo themselves. So you get some massive rumor coming out about, for example, the US-UK trade deal being on the cards. The market goes, holy crap, guys, jump out of your X. Analysts look at it and go, yeah, but what if they don't do it? Oh, undo it. Yeah, it's just a quick, give us time to breathe, give us time to analyze, figure it out. Nah. This is why we see A-shaped recoveries all the time. You hear me talk about it all the time in here, A-shaped and V-shaped recoveries, because that is 90% of the time what happens on news. You form a propulsion gap. You fill that propulsion gap. Yeah. And then if that was the correct move initially, you add to the position, or they add to the position. That's all it's happening. Which is why I say, you got to give it time when you see these spikes going in to see what happens afterwards, because this is, yes, a knee-jerk reaction, but it might just fizzle and pop back up to here by the end of the day. Yeah, because there's no need for it to move anywhere. Don't forget, this US cannot be long-term bullish because they are reducing interest rates. So the market doesn't want to suddenly pile into massive longs on anything. Even if it gets good news, yeah, it's good news. Everything's up, but it's temporary. That's all it is. It's temporary. So it's a spike. So yeah, that's good news for the US. We've got a couple of ADRs today as well. Sorry, RSIs today as well, but mainly on the 4 hours again. Nothing much on the hourlies because of what we're seeing at the moment. This. Yeah, you're not going to get a lot of extensions when the market is just doing that. So we've got Aussie New Zealand massively extended, driving me up the wall. Exactly what I said it was going to do when I got out. So it's done exactly what I said it was going to do after I got out. Isn't it always the way? So this propulsion gap and this propulsion area here at 175 ADR is where we're headed. There's a good chance that we'll come back up and test this on the way back down. So market structure obviously is bullish, switching bearish. So there's absolutely no fundamental advantage for the Aussie, no fundamental advantage for the New Zealand. Neither of them are changing their interest rates anytime soon. Their inflation is still massively too high. It is coming down quick, but when we get these big quick drops, as with everybody else, we get a bounce. So it's unlikely they're going to drop interest rates soon, which means there was no reason for that move. There was no reason for that move. And that move there we've just had because they didn't change the rates for a third time. There's no reason for either. So no reason why we shouldn't come back down to here. So yeah, looking good for shorts if you can get pullbacks. So RSI extensions to the upside. But obviously to get up there, it's got to mean revert. So you could take a long now. Get out there, get in short if you get an RSI extension. But like it's short, but it is massively extended on the 4 hour, or rather was. It's just coming out now. You're about to get a reversal alert on the hourly. Look, so you've had the 15-minute reversal alert this morning. Down there. So there's your reversal and your retest. So good chance it's going to come and push up into this area here, which is basically where they added. So coming back up there, possibly. We could get stuck here, though. And it just based from there. So I prefer it as a short, personally. But not in anything at all on that one at the moment. It's just come off of extension as well. 3 o'clock candle's just gone in. So Euro Swiss, that is also extended on the 4 hour. To the upside, this is extended and embedded now. We've been up here all week. Yep, so we got extended above the 80 level on Monday. We based, and then we had a little push up. Yeah, so again, I keep talking about there's a hell of a lot of divergence around at the moment. A lot of it not doing anything. So you got very nice bearish divergence there. Yeah, so the market making new highs on lower strength. So that is a nice bearish move. We are very nicely extended away from that 24 moving average. And there's a beautiful target to the downside to aim for as well. So good 200 ADR drop potentially on that one. Pound CAD also extended. I've got shorts on that, 4 short on that now. I've done a couple of drawdown controls on it this week. Very extended at the moment, but stuck, embedded after the news. We got the pound Swiss and the pound yen also extended on the 4 hour and embedded. Again, not really divergence on this one, but you can see how much it's moved. But that's a new spike, obviously there. So good chance that we'll pull back. Again, potential targets there, possibly down to there. But you can see how parabolic this thing is at the moment. There's a good chance when we do get some either positive news for the Swiss or negative for the pound, we will get a big strong reaction. So it's climb the stairs, elevator shaft type move, but probably only a 50% retracement. But again, that pound is bearish, but we're still not going to be changing our interest rates anytime soon. We kind of got scuppered yesterday. So we had a very, very nice result. Target for CPI is 2%. We dropped from 3.2 to 2.3. We very nearly got what we wanted. So yes, excellent. We can start reducing interest rates. What do you mean you're having a general election? Absolutely scuppered yesterday by Rishi Sunak. So this pound is very difficult to know what it will do now because the market's uncertain. As you can see, we're uncertain now what to do. Is this good or bad? What's happening now with this election, and who's going to be promising what are they going to think about? So over the next few weeks, we're going to start getting a lot of promises. Those promises will obviously, a lot of it will be to do with economics because Rishi said he's going to get inflation down to 2%. Missed, but he only missed by 0.3. Good job. We were at 11%. Yeah, we were at 11%. We're now at 2.3. Done. So he's jacking his job in. But it means the market is kind of thrown into a little bit of a whoa, what's going to go on now? So we have to see what happens with this pound moving forward. Yesterday's news means that it's a double-edged sword. We are where we want to be to reduce interest rates, but we didn't quite get to where we wanted to be to reduce interest rates. Yeah. So it is bearish in the respect of we've got it back to where we want it to be, but we didn't quite get to where we want it to be. And is this going to be a bounce, which means we put interest rate drops back? So I don't think this really has given us any real indication as to bullishness or bearishness on the pound yesterday. So I think, yes, bearish, but certainly not for 2 or 3 months, I don't think. So that means for the next month or so and up until the elections, we can go sideways on this. And then we go into summer trading, contracted sideways movement. So it's going to be tricky, I think, with the pound moving forward, but it will be news driven. Probably a little bit like the euro has been, it will get pushed around by the other currencies. So if we get a big strong move on the US dollar, we'll drop. If we get a big weak move on the US dollar, it will go up. But it won't be because of the pound, it will be because of the cross currency. So we'll see what happens with it over the next few weeks, but very mixed now, the pound. New Zealand dollar Swiss also extended to the upside. Again, that Swiss franc, I was expecting this to power up a little bit on the euro news yesterday. So all the euro pairs obviously had a nice, well, I was saying, let's look at it on the hourly, it's probably easier to see. Had a nice spike yesterday off the news. I was expecting the Swiss franc to get a little bit of that spike as well. And obviously today, today we've had that spike, but the Swiss franc hasn't really got a lot of movement off of it. Dead. So Swiss is moving very much more independently now from the euro than it was previously, because obviously it's changed its interest rates before the euro. So again, everything is still very much, we haven't got a clue. The euro is the only thing we've had confirmation of. It's definitely going to be June. Yeah. So week after next, we're coming down on interest rates on the euro. Apart from that, we haven't got a clue about anything else. We've got the European parliamentary elections on the same day as the interest rate and the press conference. That's going to be fun. Blimey. We got the Canadian rates before that as well on non-farm payroll week. Wow, what a week. PMIs, OPEC meetings, Canadian interest rates, US PMIs, Bank of Canada press conference, European parliamentary elections, Euro rate drop, first time in over a year, followed by unemployment and non-farm payroll. Hold on to your hats. That's going to be a good one. So, yeah, that's going to be a busy old week. Yeah, so that's it for news today. New home sales just come out. So we've got retail sales tomorrow for the pound. And then we've got retail for the CAD as well, and Michigan in the afternoon. So not a lot of interest really tomorrow, just mere stuff. And I'll be back tomorrow in the morning. So we're going to do an 8 o'clock tomorrow just to have a look at those retail numbers and just do a recap of everything. So Euro odd, I want to look at. If you want any other pairs looked at, let me know. I'm not going to look through all the pairs today. I did that yesterday. It's not really going anywhere today, is it? Not going anywhere, full stop. Currently short. Well, you're only going to be short from... Where would you be short from? There? That's where I got in short and I got out. Too soon, but I got out. Or you might have been short from there and I got out. In which case, should be out. I don't know. You shouldn't be short. You should be out. You can't be short on this and be in any trouble because you're in it, and it's only been coming down for the last 2 months. So. Don't know. Well done, Alan. You must be in profit. Don't know. Bearish at the moment. Anything euro, basically, if you're short on it, you're safe. You should be safe. I say should be because normally, in a normal world, when you increase interest rates, currencies power up. When you decrease interest rates, currencies power down. We're decreasing interest rates in 2 weeks' time. Therefore, this should power down. However, as we know at the moment, this market is weird. It's just doing whatever the hell it likes when it likes. So I wouldn't be surprised if when they drop the interest rate, the euro flies. I don't think it will. But yeah, shorts. And it's a good place as well, where we are at the moment. So if you get in short here at all and you're scaling 2 more positions up into that resistance. But yeah, I mean, it's a nice short from where it is at the moment. But I've been trading this one in both directions, as you can see. So I had a short there, had a long there, had a short there, a long there. Didn't quite get me in yesterday. Needed to come up into ADR, but I would have got short. But not in at the moment. So just so you know, I've turned my EA short only on all euro pairs this week. So apart from the euro pound, which I'm currently long on, I won't be taking any longs on the euro, only shorts. Just because I don't know. I think probably you'll be okay longing the euro still. Because it's going to come down in 0.25%, nothing, 0.25%, nothing, 0.25%, nothing. So for the months we're not changing interest rates, there's no reason why it won't be pulling back. So market structure should be fairly nice. So you should be able to get out on pullbacks on euros. But just for safety's sake at the moment, euro-yen monthly range just hit. Let's just hit your monthly range on the euro. But that's because it's just done nothing but that. And again, that's coming back up to fill that propulsion gap look on the intervention. So, yeah, so I'm just short only at the moment. Afternoon, Chucks. Paul also short. EA got me in yesterday, but not moving. Yep, so just hold on. Swiss yen, ADR. So it looks like this yen is getting run over a little bit at the moment. Weakness coming through in the yen. US dollar's off. No, it's not. Actually, the US dollar is not off. The yen is weakening again. So if you look at the pound US, there's your news. We haven't gone anywhere really. We haven't even got ADR yet. Look, so it's not that strong a move on the US. Fortunately, I want it to be strong. I want to ask, is that normal for the broker to close my trade 18 pips over your stop loss? Yeah, absolutely. He can do what the hell he likes. Told him to. The lower price action is 199.444. My closing is 199.326. Price never reached. Nope. Spread. It's totally normal. I've got one on one of these. I can show you exactly the same thing happened to me. It's just normal. It's just that's what they do. Go and read your contract. Is it Kansai? Go and read your contract with your broker, which you haven't read because nobody does. I didn't. There you go. You've signed a contract basically that says fill my order at the best price possible, please. Yeah, they did. Yeah, at that point in time, your stop loss was that far away, and if they took that stop loss, they made money. So they did, because you signed a contract to say, if I've got an order in the market, I'd like it filled, please. If price isn't at that level, fill it at the best price you can. If it's a TP, they won't fill it. If it's a stop loss, they will, because you're probably an A-book customer, which means they're taking the opposite side of your trade. If they take the opposite side of your trade, every time you lose, they win. So it's in their interest not to fill your TPs, and it is in their interest to fill your stops. Also in their interest to fill your pending orders, because every time a pending order gets filled, they make a spread, a commission, and a swap. They are not your friend, which is why you don't use stop losses. So I've read my broker's terms and conditions, like you told us to, and it was scary as hell. Yeah. It's worth a read. There's nothing you can do about it, yeah? All brokers are exactly the same, yeah? So you have asked your broker, when you place an order on an instrument, it's a contract for difference. That's what a CFD is. So you have said, I am willing to put an order here, and my contract with you is for the difference in the price that I'm asking for and what you can achieve for me. Yeah, that is realistically what you're asking your broker for. So if your broker wants to fill the order you've asked to be filled there, he will, because that much money is now his. And you've asked him to do that. When you place a market order, that doesn't happen. Yeah. Any order you place on your chart, pending, stop, take profit. When price gets close to that area, and this is what you've just said, Kanzai, look, let me find the New Zealand pair, and I'll show you. Yeah. Right. That's the spread at the moment, yeah? You can see where price is trading, but look at this grey line here, the top one. You probably can't see it, but it's way above the wick. Yeah. So if price pushes up to here, for example, yeah, and you've got a stop loss there, right? That lower line is where the candle will be painted. So if it pushes up to there, the candle will paint the high there using that lower line, which is the bid. The ask line, yeah, they can spread up to here, take your order out, and then pull the spread back down to there. But the bid line that prints the candlestick will be there. That's why you see your order closed out there, but price candle is there because the spread. And that is what they use to control their income. Spread. Yeah. This is what they say. So this order, if I press the buy button right now, yeah, it will fill me and they will make that much out of me plus a commission. If I hold this overnight, they will also make a swap. So every time I press the buy or the sell button, they make commission, spread, and swap. That's how they work. And you've signed a contract with them to say, fill me, please. And I don't care what you fill me at. Fill me. And it will. But it won't fill you at what you want, which is why you'll find a candlestick will also hit your TP, wick through your TP, but it won't trigger your TP because it's not in their interest, because they're probably taking the other side of your trade. Good job. I'd like it, but it costs you £250,000 to set the business up. So there you go. Afternoon, Mimo. Yusuf, I'm in 7 trades short on the pound Swiss. So yeah, you would have had an extension there. And if not there. We are 22.40, so we're 4 ADR roughly. So you should be in somewhere around about sort of 6 to 8 positions on that at the moment. 9 days. If you look at this on the 4 hour, you are really extended away from that MA. But that's what you're waiting for. But this is why I'm not trading the Swiss at the moment, because it's just very erratic at the minute, and because there's no reason to invest in the Swiss franc at the moment because they're dropping their interest rates before expected. The market is obviously bullish against it. So it's one of those pairs. I said the other day, I think it was on Wednesday in the stream yesterday or maybe on Tuesday. One of the worst squeezes I've had is US dollar Swiss, and I've been in it twice in big, bad, horrible squeezes. One was at Christmas. 22? No. 21, probably. No, it wasn't that one. Must have been there. 2020. Was that one. And it goes into these huge squeezy moves. Can't remember which one it was, but yeah, it's the Swiss. Not a lot you can do with it, really. Scale out. Around 1.5% drawdown, is that all? In 7 trades, you must be having massively low risk on that, which isn't a problem. You can wait it out longer. Basically, the less risk you take, the longer you can hold it. But obviously, the less money you make. So, yeah, hold it as long as you can. It should come down at some point. What you need is a Russian missile accidentally hitting a NATO ally. That Swiss franc will power up faster than you can possibly imagine. Everything will devalue and every single penny will go into the Swiss franc and you'll be out of everything. And then to find out that it wasn't shot by the Russians, it was an accidental hit by the Ukrainians, and they'll go, all right, that's all right then. And then the Swiss will go back up again, but you'll be out. You'll be fine. I'm in on 3 to 4 shorts on every yen pair Why are you back in the yen? Well, the plus side is if this thing continues to do this, there's a very high probability they will do that again. But the yen is, I mean, this New Zealand dollar yen, look, they've completely undone the intervention. Not that this is the thing, they're not interested in the New Zealand dollar. They don't trade with the New Zealand dollar. They trade with the US. So all these other pairs that have filled the intervention gaps, they don't matter. What matters is the US dollar, because this is what makes and breaks their economy. So this is pushing again. But how far has it got to go? We've had nothing out of Suzuki or Ueda overnight. I saw. I did have a scan through this morning, but I didn't see anything relating to FX. Nothing. So the first we'll hear about potential move again is probably Ueda and Suzuki all over Financial Juice saying FX moves are undesirable, blah, 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 as it goes up. But where it will go to before they press the button again, I don't know. Is 160 now not the level? Who knows? Who knows what's going on with this? But all-time highs are back on the cards. You have to ask the question, how long before Japan explodes? I mean, they just physically can't do anything at this level. It's too expensive. They're still at a level which is uneconomical for them to conduct business. Yeah, this was the previous intervention point. We're $7 above it. What happens next? I just don't know. I just don't know what they've got left in the tank. Every time they do this, they create themselves a bigger problem. And there's only so many times you can do that before you suddenly go, we're potless. That's it. We've got nothing left. Then what happens? Nobody really knows because no one's been in that situation, have they? So tricky. But this also could be a false breakout. We've got weakness in the yen at the moment. So it could be that we get some rally. You need a safe haven run, basically, because the yen will power up with the Swiss on the safe haven run. So ideally, some kind of conflict escalation. The other question we've got to think about is what's going to happen when Rafah is taken by Israel. There's nothing left to take, is there? They've done Palestine. So what happens next in that? Is there a complete de-escalation in that area? What happens with the economics of the area now? You know, there's lots of stuff potentially going to change in that area. So we could have more trouble on the cards, couldn't we? Thanks, Lee, but the price never reached 199.326. No. It doesn't have to. That's what I mean. It's a spread. The spread is what gets you taken out, not the price. I had a really good example on one of my charts of a stop out recently. Exactly the same thing. It was a drawdown yen. But I've got plenty of examples of it over the years. Just trying to find, it was recently, which is why I'm looking at an hourly chart going back a couple of weeks. I mean, there's that one there. You know, that's the high. That's the hourly high. That's the candle. And there's my close. Look, price never got there. That's the order execution. That's the high. And look at the spread at the moment. Add that onto that. Stop. Price doesn't need to get there. spread does. The bid and the ask needed to get there. Anton Creel did a great talk on brokers on YouTube. He also said movement on news is mostly retail driving it. Yeah. It is a lot of volume from retail on news. But driving it, there's not enough volume from the retail market to drive it. Retail makes up less than 3% of all transactions on the Forex markets. $7 trillion. We are that big. Yeah. If a bank stood there with a load of coins and dropped them on every retail order that was placed at news, candlestick wouldn't move. And they would just be like sprinkling coins. When they start dropping notes, we are so insignificant in this. We're riding what they're doing. So but professional traders using that liquidity. Professional traders use liquidity to enter and exit the market, but most of that is done by market making desks in banks and institutions. That's their job. That's why they're called market makers. They make the market. They inject liquidity into the market so that traders can execute orders, because they need to execute orders. Just a give and a take. Around news specifically, there's a lot more volume. But, you know, that volume is not created by us. We did an experiment. There's 200 of us in a group about 7 odd years ago. There's more than 200 of us in the group, but there was a good 200 odd traders at one time. We were in, forgotten what it's called. Begins with an S. It's a social media platform. Can't remember what it's called. But I was going to say Snipe. It's not called Snipe. Anyway, but we all basically said hit the button at the same time with $100 order and see what happens. All in different brokers. Obviously, nothing happened. You know, you could stick 200 grand each through this market. Everybody that's in this room right now, and it wouldn't even bat an eyelid. Wouldn't move a pip. There's not enough volume. This is why people come to me every now and again and say, but you're telling everybody your strategy. When the banks learn your strategy, it won't be effective anymore. Slack, that's it, Kennelly. Good job. I couldn't remember what the name of it was. It was Slack. Yeah, they don't even know I exist. And if 1,000 people started doing exactly what I did at exactly the same time with my EA, the market wouldn't even notice. We are trading. Even me trading with 50, 100K accounts doesn't come into the equation. It's so insignificantly small. Anybody trading with $1,000 or $5,000 or $10,000, your broker's just going, we'll take the other side of his trades. It's that insignificant. We don't even come into the equation. It's $7 trillion a day goes through the FX markets. Over the counter, there's way more than that. We can't even move it, can't touch it. But yes, our orders will all get eaten up by dark pools, which is where everything goes. It's liquidity. Every order you place on here, if your broker doesn't take the other side of it, and even if he does, he'll be farming it out to dark pools. And dark pools are just pots of orders that are sucked up by banks. It's liquidity. It's just money. They have no idea where it's come from. They have no idea what direction it is. They don't give a monkeys. They just need the volume. That's it. We just don't. You know, this is why half the time, if you're trading on anything less than an hourly chart, if you're trading 5 minutes chart, you're just trading volume of rubbish, basically. It's irrelevant. It's just movement, as the banks and markets need it to happen. Got 200K account. Don't want to risk it. Happily making 6 to 8% a month. Perfect. The more money you've got, the less you need to make. And that's a very important point. I say you should aim for somewhere between 5 to 15% a month as a very good return. If you've got $500,000 and you do not need to make 150K a month or whatever, then you don't need to risk that much. If you're happy to just make 10 grand a month off of your $500,000, tiny risk. You will be able to hold on to your positions way longer than everybody else. Your drawdown will be less painful than everybody else. Money makes money in this industry. If you've got a very small account and you need to make a good amount of money, you're going to over leverage, you're going to over risk, and you're going to blow up very quick. So yeah, the bigger the account, the better. The lower the target. This is why all these funds you see out there on Darwinix, on Darwin IA and things like that, they all want returns of 4 to 6%. That's it. Anything more than that, it's too risky. There's investors who are chucking 500 grand in. What do you mean you're going to return 10% a month? I'll take 10% a year because that's 3 times what the bank's going to give me. That's what they're after, and they want it. They do not want risk. They want safety. Yeah. You do not enter a trade with 1% risk using a stop loss on a $500,000 account. 10 trades in a row going wrong, 50 grand, they are not interested. Way too risky. 6 to 8% a month is perfect. Problem is these Japanese multinational companies that operate in other economies, but their base is yen, are posting record numbers because of weak yen. Yeah. This is the problem. They're digging themselves. The Japanese are digging themselves into a massive, massive hole at the moment. They have been digging themselves into a hole for many years. And this, I think this interest rate rise, this first interest rate rise we've just had for a couple of decades, that is their last-ditch attempt to try and dig themselves out of this by falling back in line with normal economics. And I don't know if it's going to work. And if it doesn't work and they don't do it fast enough, the next interest rate rise we've got coming on the yen is in at the end of June, 14th of June, middle of June. If they don't put that up by anything more than 0.1%, it's just not going to make any impact. In 10 months to 12 months' time, we might be at 1%. Everybody else is up at 5, 6, trying to get down to 2%. They're creeping up in 0.1 increments. It's not going to work. I just don't see it working. But the problem with worldwide economics is there's a hell of a lot of moving parts. And if you don't understand it all, you ain't got hope really, have you? I don't understand it all. Enough. Everybody else's I get because it's normal. Japanese, not normal. We will see. Anton was saying it's about volatility. High liquidity times in the market leads to low volatility. Yeah. It doesn't really matter at the end of the day. This is why I trade the way that I trade. News, you need to take out of the equation everything that could hurt you as a trader. Yeah. Stop losses will hurt you because they will be taken out with volatility. Volatility is what you need because volatility equals movement. As traders, we need movement to make money. So you need volatility, but if you use an order that stops you out of the market, you don't want volatility. So those two cannot go together. Yeah. Because they cancel each other out. So the only way you can actually make money in the market is by waiting to see what happens to the market when something happens in the market, in economics, in news, in the world, and wait for the market's reaction to that, and then wait for the market's reaction to the reaction. And as the market reacts, it will react to itself by making money and taking profits. You don't know what's going to happen on any news event at any time, but you do know at some point it's always going to move. You just don't know which direction because that's not in your control. So if you use an order that loses money, you will lose money. If you don't use an order that loses money, you won't lose money. Then you are reliant on normal market structure. And if there isn't normal market structure, you deal with it. But I can guarantee you people like Anton Krill were not putting orders in the market to lose 90 grand if they got it wrong. It's not what you do. It's not what banks do. It's not what institutions do. It's not what professional investors or traders do. Volatility you need. The banks need and institutions need volatility to execute their orders because they're massive orders. But what you end up getting is that. Go and look at an intraday chart on the 5-minute time frame. Yeah. People are trying to trade this. This is from market open in New York to market close in New York. Good luck making money out of that. It didn't do anything. It went up, it went down, it went up, it went down, because they're just dumping orders in the market. There's no pattern to this. There's no way of trading a 5-minute chart with any kind of accuracy, because it's totally random movement produced by banks and institutions that have no interest in direction. They just need to get orders executed. That's it. Can't make money on it. News, on the other hand, you can make money on if you're lucky enough to be in the right direction. But if you're not in the right direction, you can also make money on it, because all this is a big order execution at a point of high or low volatility. Yeah. The reason big orders happen, or big candles happen, is because there's not enough orders here to fill all of the buyer's orders. So if I want to put an order in here for 100 million whatevers, and there's only 2 million there, 1 million there, 3 million there, 5 million there, 6 million there, I will blow through all of this until my 100 million is gone. And if it means that I have to take price from there to there to get this 100 million order filled, that is the size of the candlestick. That's what's happening. Yeah. There's not enough people with orders in that. And we will be there. Retail will be there. There'll be stops in there. There'll be other banks and institutions with limit orders placed in those areas for customers. They will want to be getting out of orders at those areas because they're profitable. They will want to be getting into orders which are speculatively short because that's what they want to do. There's a million orders in there, and there's a million reasons why they're there. What happens after those orders are placed has got nothing to do with the fact that those orders were placed. What happens after it is what happens after it. And these have all got different orders and different reasons behind them. Totally random. Everything is random. Yeah. If banks suddenly go, Bailey's talking tomorrow, I've heard a whisper, this thing will go long. We won't know why. They will. But knowing why doesn't help you. Seeing what's happened and knowing what will probably happen afterwards is the only thing you've got. And it will or won't work. You know, this is the thing. But you can't make money on these tiny little time frames consistently. You can. Everyone can have a lucky run, obviously. But, you know, people like Anton Krill, 5-minute charts don't even come to the equation. Candlesticks don't come into the equation. Daily charts come into the equation. Nothing less. Same as banks and institutions. They might look at an hourly just to see what's happening with volume and volatility, but they won't be trading hourly charts. Ridiculous for them, because they got the money, haven't they, to move it. Trading is all about managing risk. Exactly. Yeah. Seganti hedge fund to return cash amid insider trading case. It's all rigged. Yeah. Half of it is rigged, probably. But this is the thing. It's been, you know, I can't remember who the last one to get done was, which bank it was. But, you know, there's Telegram groups, closed Telegram groups out there with trading desk managers and traders in them telling each other what they're about to do. Yeah. So if you have an order to go long for 100 million and you know there's a guy sitting the other side of it that's willing to take 70 million of that off of you, there's a 30 million gap there, which is profit. Yeah. If I tell you exactly when to press the button, I know where price is going. I can then tell the guy on the Forex desk what's about to happen in the market. If he presses the button the same time I press the button, it goes up that 70%. He makes money. Yeah. Insider traders will make money doing that. Then the regulators come along and go, you can't do that. Here's a 10 million fine. They go, here you go. Here's your 10 million. I just made 150 on it. Regulator wins. Bank wins. Guy's got a new Ferrari. We sit here going, why did that happen? Crap, I just got stopped out of my trade. That's what happens. This is what, and your broker, like we were talking about earlier, your broker's not on your side, is he? Because your broker's executing orders when price doesn't even get there. This thing is very hard to make money out of. Very hard. People think it's easy. Every time you stick something in a back test and go, wow, that thing makes a fortune. Real world, it isn't going to happen. It's just not going to happen. If only. A lot harder. So, nothing else has happened so far today after the news. So we are nowhere off of that PMI number. So if you look at the Euros today, all the Eurozone PMIs are getting undone by the US PMIs at the moment. So it's not really a lot going on today. You know, that's where we opened. That's where we've got to. This is where we are now. So less than a quarter of an ADR movement pretty much across the board today. We've had spikes, but not a lot of movement. So I think it's a case of just sitting around still and waiting. We're getting just sideways movement at the minute. There's no real reason to move until that European interest rate changes. So it's just a case of trying to hold on and stick in trades and get out of them, basically, with profit along the way at the moment. But nothing much going anywhere unless you're in something like a Swiss franc or a yen pair, which are just off the charts at the moment. Lee, I do believe you are the true market wizard. Infinite wisdom. Just comes with age. The market wizards, you know, the original ones in the book. The market, if you're not familiar with the Market Wizards book, brilliant book. Good eye-opening book. Market Wizards. Interviews with top traders. I would replace traders with investors. Probably more accurate. But it's well worth a read. The strategies they used were so unbelievably simple and intertwined with luck. Yeah, there's nothing clever about the people that made a lot of money. There's nothing clever about Warren Buffett. Yeah, nothing clever at all. Yeah, he identifies something does this. When it does that, he buys it. Yeah, and if it keeps doing that, he just keeps buying it. Because it does that. Because he knows that there is an edge in the fact that companies make money, which means stock markets go up. They never go down. They don't go down. Go and look at an S&P chart. Stock markets go up. All he does is buy stock markets. These guys identified things that happened in the market. Some of the indicators that we use today were created by these market wizards. And all they were doing was observing what happens with human beings, supply, demand, want, and need. They did nothing but manage risk. There's no complicated indicators. There's nothing clever. I don't do anything clever at all. I sell when the market has been rallying and I buy when the market has been dumping, and I wait. I don't do anything clever. I'm wrong most of the time, but I know how the market moves most of the time. When it doesn't move, I lose. Nothing clever about it. It's just observation. It doesn't take a rocket scientist. What the problem with trading is you can see an edge as clear as day on the RSI. That dropped, that dropped, that dropped. That didn't, but then it did. This hasn't yet. And it hasn't from there yet, but it will. Yeah. You can see edges. That popped, and that popped. And that took a while to pop. Yeah, it's 100% strike rate, although this hasn't played out yet. But the problem is you get in there and you won't hold it, or you won't make money, or something will bore you after 2 weeks, and you will come out of it and go, I've made 3%. It's not enough. And you'll go somewhere else. You found the edge. Get in and get out. Yeah. Forget that. Take all indicators off your charts. Yeah. And basically, when it gets there next time, sell it. And when it gets to here, next time, buy it. If you can wait that long. Yeah. And if it comes down, get out. And if it goes up, get out. That's it. Don't need any indicators, do you? Yeah. I use indicators because I need a reason for automation to execute my orders. Market reversal alert executes my orders. Price moving down below a moving average executes my orders. I need a reason for an automated tool to get in. So I use a relative strength index, which tells me when an up's happened. Yeah. None of it's the best. None of it's the worst. It's just a thing to get in. But if you did that, if you just literally sold it there, yeah, like the guys who sold it there, and here are doing now, it will either come down or it won't. And if it doesn't, it will come down from there. And if it doesn't, it will break above that level. They'll be so exhausted, eventually they'll bring it back down again. But nothing on the planet is going to help you to identify when that is going to happen. There are instances where things happen. After an RSI is extended, it quite often does this. Sometimes it doesn't. When a price hits a resistance level, it quite often does this. Sometimes it doesn't. Everything is a 50-50. The only thing you've got is risk. Yeah, but I can guarantee you, if you go short there and you place a stop loss there, that will get executed with 80 to 90% accuracy. If you remove that, you will win. That's it. Because you cannot predict where market's going to go to. So how could you possibly put an order in to say, get me out if it goes to there because I'm wrong? You're not wrong. You're temporarily wrong on your entry, but you're not wrong. You're just not right then. So let's change the price and get right later. That's the thing. That's all it is. That's what the market wizards, most of their strategies you will find in that book, all revolved around entry and exit after either periods of time or distances. There was never a line put in there that went jump ship. There were lines put which said get in again, and they were in positive and in negative. But there's never a line that said lose it all quick. Not one of those strategies in that book. Larry Williams, Larry Conn, all the big names that you've ever heard of in trading. Warren Buffett, yeah. Investors, yes. Traders, yes. They're doing the same thing, but they're not doing what 90% of people are doing with retail at all. Just, it takes you a long time to realize that because everybody's selling you a Ferrari, aren't they? There was a guy who worked on a desk, sells signals as price TPs on Telegram, and he got caught and fired from his firm. Sells signals as price TPs. But, you know, a guy that working on a trading desk is like, this is the thing you got to understand. If I'm that guy on that trading desk and I'm about to execute a massive order, right? And I work for Barclays. If I execute that massive order and HSBC and Citibank and Goldman Sachs are sitting up there with bigger orders than me, my order ain't going anywhere. So how can one bloke on one desk tell you where price is going? Because he hasn't got control over price. He's got control over the orders he's placing in the market. But he's got no idea if it's going to make the market go up or not. Because if he puts 100 billion into the market now and there's 300 billion sitting there to go short, he's just going to hit an iceberg. Which is why they call them iceberg orders. This is what support and resistance is. Supply and demand. Limit orders in the market which stop price achieving a new price point. And this is what price discovery is. A bank or institution attempting to break out of a level to find a new price to trade at profitably, failing because there's more people that don't want that because they're short. There's not one person in one bank or institution on one desk that could ever tell you where price is going. All they have is a power to execute X or Y, and what happens at Z is out of their control. They can't tell you where it's going. If Citibank, HSBC, Goldman Sachs and Barclays are all in the same group and they give you a signal, pretty probable that that's going to go where they say it's going to go. But they don't do that. Which is why, you see people like Nirav selling courses, used to work for Barclays. So what? He knows how to execute orders in Barclays, if that's what he did. He doesn't know where price is going, doesn't know how price is going to move. In institutions, they don't look at charts, they don't look at footprints, they look at ladders. Everything people like him are selling you isn't what he used to use in the banks, because they don't use that stuff. Retail, because it's selling you a piece of software, Sierra charts, and it's selling you templates and patterns for a piece of software through a broker. Every single thing in that chain makes money, but the person using everything in that chain. Rubbish. All a load of rubbish. Generally blows my mind how there are only 53 people watching this. I know, but that's because nobody believes it. The amount of people we get coming through YouTube, there's regulars in here every day. And there's transients through every day. Telegram channel's got 4,800 members in it. It's 50 people in here. What do you think those other 4,825 people in the Telegram group are doing? Buying courses, buying indicators, hopping here, hopping there, trying to buy a Lamborghini. I can't help. I can only explain. I can't force people to listen. Going to read that sounds intriguing. Yeah, it's a really good book. Of all the books to read, Market Wizards, Tits by Mark Douglas, Trading in the Zone. Market Wizards, Trading in the Zone, and Tom Hoogard's book. I mean, a lot of people have mixed feelings about Tom Hoogard, whether or not he's a great trader, results are accurate, whatever you may say. His book's good as well, because his book doesn't talk about trading systems or strategy. It talks about you and why you are going to or not going to make money. Those are the books that make the money, not the ones that give you the systems, not the ones that teach you about candlestick patterns. It's all irrelevant. A candlestick pattern is just basically price playing out on a chart. When it gets to the end of that pattern and it gives you the signal to go long or short, the chances of it working are 50-50. It's got nothing to do with making money. It's whether a pattern works or not. And a pattern working has a success rate of wherever that price goes after that pattern works. Relevant. Best loser wins, yeah. And it's all about taking losses. But Tom is a totally different style of trader. Yeah, he's a scalper. Low time frames. He's in and out within one candlestick. Totally different to the guys that wrote these books. But again, Tom is all about risk reward. Yeah, as long as you make more than you lose, but everything he does is random. Yeah, he will get in because price has gone above a wick. He'll go short. Damn, that didn't work. He'll go short. Damn, that didn't work. He'll go short. Damn, that. Oh, brilliant, that worked. And he'll make 3 points, but he's risking 300, 600, 900, 1,000 a point. He's scalping ticks out the market. If you can do it, brilliant. If you can't, you've got to find out what's for you. And all these books will teach you lots of different ways of trading. I can't do the scalping. I can do the scalping, but I find it hideous to do because it's hard. It's too hard. So people, you've got to find what fits you as a trader, which means you've got to try a load of stuff, but you will work out eventually that none of it really makes any difference. But you've got to have a strategy, and the strategy that I've come up with works sometimes. But this strategy isn't what works. The fact that I know that if it doesn't work, it will work is what works. Yeah. If it doesn't work here, and it doesn't work here, and it doesn't work here, it's massively extended beyond where it would normally get to. It's going to work at some point because it always does. And if it doesn't, there's something really wrong and you lose. If you lose 2 to 3 times a year, so what? Unfortunately, if you lose immediately when you start, that's where everyone hops off to new systems and strategies, isn't it? Maybe he is like most of the signal groups, yeah. Afternoon, Brian. Emma says hi, by the way. I don't know who Emma is. Jeremy, I concur. It's amazing to me too. The trading channels that provide signals have more views than the ones that provide true value. Yeah, because everybody's looking to make a quick buck, aren't they? This is the thing. Lazy traders. And there's nothing wrong with that, but it's just gambling at the end of the day, isn't it? You know, gambling's fun. Most of the time they are making market making for their clients, not proprietary trading. Yeah, exactly. That's why you get retracements. As I've said this before in here. Yeah, when the reason the market and why the reason Fibonacci works is because if you've got a movement in the market, that movement will be made up of 50% commercial orders for large corporate clients, yeah, who want to transact. They need to convert pound into Swiss. Yeah, once that transaction is done, it's done. There is no reason to do anything else. It's complete. Then you've got long-term orders, hedge funds, pension funds, long-term speculative orders, who are going to get into the market and still be in the market in 3 months' time. They won't get undone. Then you've got speculative orders, which are short-term profit-making orders used by banks and institutions to generate alpha, generate revenue, generate money, make money. Yeah, these they will get in and they will get out when they've got the revenue that they need. So when the market moves a distance, a percentage of that will be taken off. A percentage of it will never be taken off because it's done. That contracted order is placed. The company haven't said, convert that back for me. So there's no reason for that order to get undone. This is why Fibonacci works to a level in market structure. You never know where it's going to pull back to, and you never know where it's going to go to. But that is market structure. And that is why the market has a structure, because there are more orders placed in one direction than in the other over and over and over again, which drives the price that something trades at to new highs. It's up here because there's been more orders placed in that direction, but a percentage of those were speculative, which have been taken off. That's what we're doing. When they've done that, we take that because we know it's coming. What we never know is when it's going. And that's the thing. Trend traders will try and get in on pullbacks. They try and get in at a 30% retracement, a 50% retracement, a 60% retracement. Then it retraces 100%. They stop out. It comes down to 120% and it goes. You have no idea. But if you get in long there, get in long there, get in long there, and get in long there, it doesn't matter where it goes to, does it? As long as it goes. And if it doesn't go all the way you wanted it to go and it only goes part of the way, you can get out still. We're taking a piece of meat out of a move that we cannot predict the high or the low of. But we still don't know when to get in. That's all we're doing. We're taking a piece of the pie. Somebody said to me, one of my mentors, with this particular indicator, the guy that taught my mentor about this said his strategy was really simple. When it goes green, he buys it, and he keeps buying it until it goes red. By the time it's gone red, there'll be a bit of meat, and I'll have that. But I'll never get that, and I'll never get that. But if I get in when it goes green and I get out when it gets red, I'll make a bit. That was his strategy. Absolutely no stop losses in it. Absolutely nothing but getting in and getting out and holding it for as long as it took for the market to decide it wanted to go the other way. And when the market went red, he went short. And then he got out when it went green. And sometimes it went red and green and red and green and red and green, and he made a bit of loss. But the amount of loss he made there was outweighed by the meat. That was his strategy. That's a market wizard strategy. very simple. There's nothing to it. Get in when they're buying it, get out when they're selling it. Get short when they're selling it, and when they start buying it again, get out. Doesn't take a rocket scientist, does it? It's the old sell high, buy low. You've heard it many times. They were saying this in the 1930s. Same is true today. You buy it when it's low, you sell it when it's high. Because when it's high, it comes down, and when it's low, it goes up. It sounds really simple, but that Market Wizards book, well, that is very, very much like that. It's very, 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 very simple. There's absolutely nothing to it. But this bit is the bit that will let you down on every strategy. This bit you can't change. So you have to have a way of adjusting your price when you're wrong. And if you can adjust your price when you're wrong, you're right all the time. Not all the time, but you're right most of the time. That's getting rid of the psychological part. That's what position trading is. We remove the psychology because you can't change your psychology. You can read as many books as you like about it, and you can identify that's you. You can't change it. Everybody's trying to change the way that they trade or trying to change their approach to trading. You are you, and that is what you are. Leopard doesn't change its spots, as they say, and that's exactly the same in trading. You need to find the time frame. You need to find the system or the strategy that fits comfortably with you, but you can't change yourself to become a 5-minute scalper if you literally cannot handle the movement on a 5-minute chart. And if you like to get into the market and hold it for weeks, you will never get down to the 5-minute charts. If you love the excitement down here and you can't sit on your hands for more than 2 minutes, you're never going to be able to make it as a day trader, i.e. trading daily charts. Your psychology is wrong. So you just got to fit yourself into those groups and find which one you're in. And that is only done through trying stuff. It's a journey. This is why I say people don't make it as traders and become profitable for 2, 3, 4 years. Anybody you see selling a course that is under the age of 20 or under the age of maybe 25, they haven't been doing this long enough to know that it's right, it's working. You're not going to stumble across the right strategy first time. Never. Well, not anybody I've met anyway. Show them your Lambo. It's about as close as I'm getting to one. You sure? My small Lambo. I'm on the final chapter of Trading in the Zone. It's a good book. You'll never look at a dog in the same way again. And you'll know what I mean if you're reading that book. I'm getting the feeling it's been Poke the Bear Thursday. No, it hasn't been Poke the Bear. We're just bored. There's nothing to do. Just sitting, waiting for stuff. We're waiting for stuff to stop doing stuff. Just, that's what it is at the moment. We get some news in one direction, and then the news takes it in the other direction. So we had a lovely bullish euro today. Now we've got a lovely bullish US. And we're exactly where we started. We've hit ADR. We've come back. We haven't gone anywhere. It's one of them. But indices, absolutely beautiful today. Clean break, $100. Clean break, $100. Clean break, $78. I'll take that. Read the Gary Stevenson book. He was a currency guy at Citibank. Gary Stevenson. Gary Stevenson. The Trading Game. #1 Sunday Times bestseller. Yeah, I haven't read that one. But How He Made Millions. Yeah, but these rags to riches stories, this is the thing about some of these books. Some of these books are based on luck. People are lucky. Tom Hoogard says it in his book as well. He had a really lucky trade early on in his career, made a lot of money very, very quick. It was luck. a lot of these guys that have worked for big banks and things, if someone gave me 10 million and I had a lucky streak, I'd write a book about it. But unless it's something sustainable, it's just a story about how someone did something. But I don't know, I haven't read it, so I don't know. But there's a lot of those types of books around where you read them, and I've read a couple, and you just think, well, you didn't really get anything out of that. It's really interesting, but does it help? But if you pick something up out of it, it's good. But, it's very easy to make, as I said, if you've got money, you can make money. Money makes money. It's a really true saying. It's like businesses. If you get somebody that starts a business and that business takes off, what they tend to do is use the profit from that business to make another business. That business has got no risk in it because it's making money from a business that makes money. Therefore, that business automatically becomes successful because it's got money to put into it. Yeah. And then all of a sudden, because you've got two businesses, you can sit back and do nothing and then use your wealth to put into another business. And it's a snowball effect. If you've got any bank or institution behind you, it's very difficult not to make money. But obviously, when you're doing it yourself, there's a capital problem always, isn't there? So a lot of these books, Market Wizards is one of them. They're making massive, massive money, but with very, very, very small risk or with very high drawdown and low return. And again, this is why I keep saying there's nobody ever in any successful trading realm that told you had to have a positive risk reward ratio. All these strategies that go, yes, what you do is you get in when this happens, you put your stop loss there and you use a 2R to make money. And as long as you have a strike rate above 65% or whatever, or in that case, it'd be lower, wouldn't it? It'd be something like 35%, you will be profitable. Doesn't happen in the real world though, does it? Because what happens is you get stopped out 7 or 8 times on the trot. And all of a sudden now, because your account is 8% down, you've got less capital to risk. Because you're risking less capital, achieving that target that you wanted to achieve is harder. And instead of making 8 trades at 1R, you've got to make 10 trades at 1R just to get back to a break-even point because your capital risk is lower. All this sort of stuff is never covered in any systems, strategies, or books. Because they don't work that way in the real world. It's not how it works, is it? I don't know. I'll put that one on my list. I've got a little list. It's not. I'm looking down at my desk because I've normally got a pad, but my pad's not there. But yeah, I'll have that one. I'll have a look at it and see what it's about. I'm always interested in reading anything to do with trading. You never stop learning in this industry. So I'm always interested in new stuff I've not heard of. And that's brand new, isn't it? Look, 2024. I like that. A confession. That sounds like he's about to tell us something we don't want to know. Euro pound buys are like pound CAD sells are like a tortoise. Patience is key. Yeah. Yeah, I mean, this is just a grind at the moment. It's just a grind. This is the thing, isn't it? This is actually looking a little bit more like what we're used to. But we've been so used to being just stuck in these kind of nasty little ranges with a little bit of news in the middle. We're actually getting some proper decent movement and parabolic as well. Multiple RSI extensions with no pullback. So this thing's coming back down. You can see where my TP is down here. But it seems at the moment we get sustained something, don't we? And most of the time it's this. But when it's this, it's just painful to sit through. New Zealand dollar CAD, I'm stuck in at the moment. You see how many DD controls. Here's another one. There's another one. Look. Yeah. That's my stop loss. That's the high. Nowhere near it. There's my stop out today. Drawdown control done today. There. Price went to there. Just the spread is what is calculating your entry and exits. But yeah, stuck in this at the moment. It's just in 1, 2, 3, 4, 5, 6 days of no movement. 1 day up. 1, 2, 3, 4, 5. Now we're broken out. Yeah. So of this trade that I got into, we have literally had 1.5 day of movement. We've had over 2 weeks of absolutely nothing that you can do absolutely nothing with, unless you're down on the 5-minute charts and you're flipping a coin and hoping that you can make money out of some of this intraday movement, which is less than an ADR. Possible, isn't it? It's just a horrible, horrible market. As soon as those interest rates get going, we'll be off. It'll be back to normal. Market structure will be in. The volatility will be up. ADRs will expand. It'll all just be back to normal. Profit taking. Banks will start making loads of money. But right now, everyone is just sitting here, biting their fingernails, going, when are these interest rates dropping? Until then, we'll just sit there and we'll rotate. We'll just make bits and pieces. That's what they're doing. That's all they're doing. There's no reason for anybody to do anything at the moment, is there? Until these interest rates start shifting. So it'll come. We've got a lovely resistance coming up here as well on this one. Today, look, potential M pattern reversal going in today. Fingers crossed. That's an easy target. That's where I'm after. But if it gets there, I'll probably get out because that will just basically pay for the losses on this one. We'll see. Right, I'm going to leave it there. I'm back tomorrow at 8 o'clock tomorrow morning. We'll look at the pound retail numbers and see if we get any more movement off of that. And we'll just have a look at all the FX pairs, have a look at the fallout from today, which obviously at the moment it doesn't look like we're doing anything anywhere. So everything we're seeing today is just undoing itself. So there's nothing exciting happening anywhere particularly, but we'll have a look at everything. I'm not here next week. It's a bank holiday in the UK next week. So we've got away to speaking, and then it's a bank holiday in the UK. It's the half-term holidays. All the schools are off. So I'm off next week. There's very little news next week. We've got the CPI for the Aussie. We've got US unemployment. And that's pretty much it. We've got the final PMIs. That's the week after. So that's it. Yeah. So we've got literally unemployment claims, which isn't the unemployment rate. Not really important. And we got the Aussie CPI. So next week, next Wednesday, that's really the one that may move the market, the Asian market. Monday will be dead. Unless Oada says something ridiculous like we're putting interest rates up by 2%. Not going to happen. But could say something. Other than that, it's US bank holiday as well. So Tuesday, high volatility because there won't be volatility there. Wednesday, CPI. The rest of the week, dead duck. So hence me just not bothering next week. I will manage all the positions I've got on, obviously. I'll be checking them periodically. But it's going to be quiet. The week after, however, it's going to go nuts. Yeah. So we got non-farm, we got interest rate changes, we've got all sorts of stuff happening afterwards. So it'll be a busy week the week after next. So if you're not around tomorrow, I won't be here next week. I will put that up on the website. But I'll be back, obviously, the week after. So I'll be in Telegram and Discord if you need anything. Time to hit the beach. Yeah, it's going to rain. I can guarantee it's going to rain. It's half term. Yeah, kids are off school. It's going to rain. So, yeah, I'll be back the week after. But anything you need, I'll be in Telegram and Discord. But I'm back tomorrow morning at 8 o'clock anyway. So we'll have a look at what's going on there. Other than that, have a good evening. And I'll be in Telegram and Discord if you need me. I'll see you in the next one.